You're listening to the ZABE Smart Mortgage Podcast, a podcast show that inspires and educates you about the lending process, what trends we're seeing, how to get the best rate, and so much more. Hosted by Fidel Dorado, team leader for the Fidel Dorado team at ZABE Mortgage Group. Fidel has helped hundreds of people with their mortgages, and now he wants to help you become mortgage smart.
Thank you for joining me today on the ZABE Smart Mortgage Podcast. My name is Fidel Dorado, and today we're going to have Jeremy Goodson that's going to be joining us to talk about mortgage insurance, PMI. Jeremy Goodson joins us from Essent MI, a company that we've been working with for several years now, one of our partners, MI partners. And Jeremy has been there for us, given us a lot of great value. So Jeremy, welcome to today's episode. Thank you for joining me.
Thank you, Fidel. I'm glad to be here.
So I know there's a lot of information out there, a lot of misconception, a lot of misinformation about mortgage insurance, right? And everybody talks about, hey, PMI, I don't want to pay, I want to save up and things like that. So what is PMI? That's one thing that we're going to talk about today. What is PMI? Why is it needed? How can it help a buyer purchase sooner, maybe? So let's start off with that. What is PMI?
Well, it's basically insurance for the investor, for the owner of the loan. And when a borrower doesn't have 20% down, Fannie Mae and Freddie Mac will require the lender to place mortgage insurance on that loan. And because they buy most of the loans in the country, it's required on most conventional or all conventional loans above 80% loan to value. And what it is basically insurance for default. If the borrower ends up defaulting on that loan, let's say it's a 95% loan to value loan, and the house goes into foreclosure, the owner of that loan, the lender or the servicer, or Fannie Mae or Freddie Mac, whoever owns that loan, can actually file a claim and get a certain percentage of the loan amount back after they have that, after they own that property after foreclosure.
Got it. So it doesn't really, it protects more, it's more for the lender, right? For protecting the lender, the servicing company, the investor versus, the buyer, the homeowner. Does it do is there any benefits for as far as protection for the homeowner?
Well, yeah. There's not protection for the homeowner, but there is a benefit to the homeowner because having mortgage insurance, they can put as little as 3% down on that purchase. So it allows them, having mortgage insurance allows them to get a loan with only 3% down. So there's a huge benefit to the borrower. But what private mortgage insurance is not like insurance in case the borrower loses their job, and they can file a claim and kind of get money to help pay their mortgage. It's not like that. What it is for the lender, just in case of default.
Got it. And it's totally different than what it would be from your homeowner's insurance and fire insurance, hazard insurance, anything like that. I know sometimes people think that, does it protect me from if the house were to burn down or do anything? But it's a totally different type of insurance that just strictly mainly protects the lender, servicing company, or the investor, which allows when people don't give that 20% down. That's basically hands down just what it is.
That's exactly what it is. We're called a monoline insurance company, and that's the only type of insurance we do is private mortgage insurance.
Can homeowners shop around for their own homeowners mortgage insurance, or is it something that us lenders do that on their behalf?
Yeah, that's a great question, and the short answer is no. The lender will be choosing the mortgage insurance, and it's a business-to-business relationship that the PMI company has with the lender. So the lender will be doing it, not the borrower.
Gotcha. And as far as costs and things like that, how much does it cost, and because I know this is strictly for conventional loans. This is not an FHA product; it's conventional loan products. What is the cost, and what is the breakdown? What are the tiers of when it's a good time to, let's say, for example, if I'm trying to decide between an FHA loan or a conventional loan, what is that, fine line? Okay, well, you know what? I'd rather go with a conventional for these reasons versus going FHA.
Sure. Well, it's a really good question. That's something I talk about a lot. As you know, FHA is just another type of product that you can use to get a loan with low down payment. And it's kind of a competitor to private mortgage insurance, and it's operated by HUD. what affects the pricing is going to be a few different factors, or a lot of different factors actually, but most importantly are going to be the loan to value. So the less down payment, probably the more expensive it's going to be, and FICO score, of course. So the lower the credit score, it can get expensive. The higher the credit score, it can get very affordable in a lot of cases. And choosing FHA over private mortgage insurance, it's really going to boil down to the credit score. If some borrowers have lower credit scores, FHA might be a better fit for them than private mortgage insurance. But conversely, those with better scores on the spectrum will be more apt to go with private mortgage insurance because the pricing will be more attractive.
What do you think that cutoff point is at between, as far as credit score, 680 or above, 700 or above? Where do you think that threshold is?
Yeah, I mean, it's close to, I would say, of course, every loan is different, and we use risk-based pricing, and we look at like 400 different factors within the loan, FICO being one of them, credit score being one of them. But yeah, I start to see FHA looking a little more attractive in terms of pricing once you start getting below 680.
Got it. That's what I come to find too, as far as when I'm trying to compare and look at different options and present the different strategies to our clients is usually, you have that threshold between 680, 700, because it's not just meeting the requirements, right? As far as getting the pricing and being within the debt to income ratios and all that, but you also have to have automated approval. So when you run the file through DU with Fannie Mae or with LP through Freddie Mac, it has to read the overall credit profile of the buyer, and it may not allow for it. It may not approve the loan, even if you have the credit score that's at 680, 660, you're above the 620 minimum requirement, but it takes into account all the different factors, right? So there is a point where, an FHA loan will hands down be a better loan strategy or option for a potential buyer if their credit score is maybe 680, 700 or below, right?
Yeah, for sure, and vice versa.
As far as with mortgage insurance, and I know a lot of people they get it confused as far as when they're talking about hey, well, my realtor, right? My realtor says that it's the best way to go. The sellers will not accept an FHA loan. We have to go conventional, and trying to explain that, hey, look, in your situation, it's because your credit score is at 680, 660 or below, it may not benefit you for these reasons, and try to explain as far as that kind of stuff. So what's your opinion with that as far as when they have, and this is more, I guess, a realtor type of thing or a scenario, but I just want to get your point of view of that when they're getting advice from the realtors about, hey, you may want to go with a conventional versus an FHA.
Yeah, I've heard that, and it's kind of a shame. And like you said, there's going to be borrowers that can't do conventional financing and kind of have to do FHA financing. And and with realtors saying that, it kind of makes it harder for them to buy certain houses. But like you said, I mean, sometimes it just doesn't work, right? It's too expensive, or they simply can't get an automated approval, so they have to go with FHA. And yeah, I mean, I guess it's sort of a shame that that's being out there in the marketplace.
Yeah,
people are saying that in the marketplace.
Yeah, it's just a little more difficult. Again, it just comes down to really advising them and showing them. One of the things that we like to do here is really show them here on our screen. You can see my little computer screen back over here, or my TV screen. I'm sorry, and show them the difference between an FHA and conventional. And and you alluded to it earlier. There's like 400 different things that are looked at, right, to determine an interest rate or determine the cost for the mortgage insurance. And that's really what's called loan level price adjustments, right? And all the factors that take into a place: FICO score, down payment, are there multiple borrowers, impounded account, single family residence, multi-unit property. I mean, all those factors take into account when you're trying to calculate the cost or the interest rate. So basically what I want to explain to all our clients out there is that, hey, there is the right time when going conventional, and there is the right time when going FHA. It just depends on your overall credit profile and the strategy of what we're going to try to work with and things like that. So ideally, yes. I mean, if we're looking at conventional, I run the numbers, and I found that maybe like about 700, 720 plus is where you're going to have that big difference where it's going to maybe benefit them more than going with an FHA loan. It's more attractive that way, I think, especially in the long run. And one of the benefits is that the mortgage insurance eventually does fall off as compared to an FHA, which is for the life of the loan, right? So that's one of the benefits that we have there.
Yeah, most definitely. It will be able to come off, and I know we're going to get to it, but I do want to point out that on our website, our rate finder is where you as a lender can go in and look at rates for the different premium plans. And I know we'll talk about premium plans too, but one of the cool things about it is there is an opportunity to compare private mortgage insurance to FHA right in our rate finder quote system. So it's a great visual for your borrowers. We can really highlight some of the benefits of conventional financing with private mortgage insurance, or in some cases the benefits of FHA, right? Because it may be more attractive in terms of cost. So it's a great tool, and I know you use it, so we appreciate that.
Yeah, definitely. And I had one example today with the client that I met with where we were going over the difference between an FHA and conventional loan, and they were thinking that the mortgage insurance was going to be, that it's expensive, that they wanted to save up, 15-20% down or whatever it is before, because they wanted to either eliminate or pay as little PMI as possible. And when I compared the numbers with an FHA loan, showed them what it was going to be regardless, because that's a flat number, right? Regardless of your credit score, it's a set rate, set premium that you're paying for per month versus conventional. Her credit score was, I believe, like a 798, I believe is what it was. And when I showed her how much it was going to be for putting in 5% down, I think the mortgage insurance was like $34 or $40 per month. So she was like, wow, it's that low. And I'm like, yeah, it's really not that expensive because of your credit profile. So she was really shocked with that. And she was like, well, I've been trying to save and waiting this whole time. In the meantime, the rates have been going up. I could have purchased, several months back or early part of last year and just come up with 3% down or 5% down, and I have to wait for the 5, for the 10 or the 15 or 20 just to get rid of the PMI. I said, yeah, you're correct. You could have purchased last year.
Yeah, we actually have a tool on our website where the rate finder is. We have a tool called Essent IQ, and in a nutshell, it's basically like the opportunity cost of buying a house now with private mortgage insurance as opposed to saving 20% down. You kind of put all this data in, like your savings rate, how much you can save a month, how much your rent is, what the loan amount's going to be, and it'll basically say, well, you could buy now with 5% down and be accumulating this much equity in your house by paying down principal and appreciation in the market. But if you save the money that you were putting away and you enter that data in, it would take you X amount of years to save for 20%. And it's always some, awful, horrible number, like 17 years. And it's a great tool to help borrowers understand the opportunity they have right now with private mortgage insurance and not waiting to save 20% down. So it's a great tool, Essent IQ.
That's exactly what it is. It's a great tool. It's a great tool to get you into your house sooner rather than later, and not be subject to what we're experiencing right now. If you decided to wait, maybe a year ago, maybe 6 months ago, and you decided to wait because you're saving, and now look at that. You may have a good amount of money saved now, but if the interest rates went from a 3.25, 3%, 3.5 to now maybe like in the low to mid fives, what savings are you really having? So PMI mortgage insurance, it is a great tool. You just have to understand why it's required and how it's going to really benefit you. And it just comes down to education, right? Advice, guidance. That's basically what it comes down to overall at the very end.
Yeah, for sure. And you're really good at that. Definitely. And you really inform your borrowers on the pluses and the minuses and, all the ins and outs of their mortgage and, of course, the mortgage insurance.
Yeah, definitely. So I think we got some good information as far as understanding why PMI is needed, what it is, why it's needed, and how it can benefit potential buyers purchase sooner rather than later. So those are some of the smart tips that we give out here to make sure that we properly advise our clients that way. So Jeremy, thank you for that. Next topic that we're going to be coming up here pretty soon is what are the 4 different PMI options, or I think there's maybe even more than that. I mean, you can tell me about that, all right? But the 4 most common PMI options out there as far as what we can do. So we'll be talking about that here next, okay?
This has been an episode of the ZABE Smart Mortgage Podcast. Whether you're a first-time home buyer, purchasing your next home, or refinancing, being smart about your mortgage options will save you time and money. ZABE Mortgage Group connects you to the technology, resources, and education to make you mortgage smart. From pre-approval to applying to getting approved and managing your loan, visit zabemortgage.com.